For more on the latest market moves, let's welcome in Ryan Grabinski, Managing Director of Investment Strategy at Strategas Research Partners, a Baird company. Ryan, it's good to see you. So you just heard Julie and I talking, Ryan. We're talking about, of course, the small caps. Ryan, investors have been talking a lot about those pint-sized companies, and they're down today, Ryan. But such a quick, aggressive move higher. I'm interested what you make of it, because your notes, Ryan, were interesting. When you look at that small cap rally, what you're suggesting is you really see it as kind of maybe more of a trade rather than the start of something bigger and broader.
Yeah, it's first off, it's great to be here. Thanks for having me on. The one thing I will say about small caps is, I would say I'm probably a little more skeptical than most of the street right now in terms of the durability of the rally within the space. We've generally saw a 10% move higher here, and largely what that was it was a re-rating of multiples due to a reduced odds, I'd say lower Fed rate expectations, and that's a way of saying that the terminal rate for the Fed funds rate has come down to about 3.5%. So there were an additional 2 cuts that were priced in. So multiples, the NTM multiple for small caps basically jumped from about 22 times to about 24 times over the past week. What we didn't see was any follow through in terms of the fundamentals overall. So I look at the NTM EPS for both the S&P 600 and the Russell 2000, and it continues to be sort of on the low end of the range of where it has been. It really hasn't seen any uptick. So until I start to see some sort of fundamental follow through with regards to the small caps, I'm a little skeptical about the durability of the rally. Now, sure, I do understand that the banks make up a large portion of the small cap index, and everything that's going on in Washington, there's certainly some might be some regulatory reprieve that comes should the Republicans ultimately win and there ultimately be a Republican sweep. But I think that's probably more likely going to be a trade rather than an investment opportunity. There's not necessarily a story that would be associated with the banks more longer term, and so obviously that kind of hurts the small cap space overall.
So, Ryan, as I was just talking about, in recent days we've had this rotation, right, where things have come out of mega cap tech, out of some other winning areas, gone into places like the small caps. Today, it's not going much of anywhere in terms of winners, right? And so what kind of risk are we seeing from that rotation and the broadening out that could be supportive of a continued rally to just being a plain old sell-off?
Yeah, it's a great question. So one of the things that clients have asked me today is, say, have we seen the top in the markets, this cycle, and are we in a bigger sell-off? So I think it's a good question to ask. I think there's, heading into this earnings season, the earnings overall, the bar is pretty high for the overall index, I would say, especially on the large cap side of things. Obviously, there's been a lot of growth that's associated with the Magnificent Seven, and that's kind of where we're seeing that rotation out of. I'm gonna wait for the earnings season to really come about to get a better picture. Obviously, we saw the earnings report from ASML. Things were looking a little weaker. Their guidance was a little weaker. Thinking about TSM today, obviously things seem to be okay. So you start to think about, okay, have we had this sort of AI euphoria that the market has been facing over the last 6 months? Is that sort of turning into an AI disappointment? And so, I think generally speaking, that's the biggest risk heading into the next 6 to 8 weeks is, are we setting ourselves up for this AI disappointment, and do all of the trades that were associated with AI ultimately begin to unwind themselves? And that's not only associated with the tech sector, right? You had some of the nuclear companies had been associated with, okay, there's going to be more power demand, and that power generation is going to come from the nuclear space, and so those names have started to see a bid. And the other trade, which I think it kind of goes underappreciated here, and is starting to see some of itself, is actually the sell-off related to the weight loss drugs. And so Lilly and Novo come to mind specifically there within the healthcare sector, right? They had accounted for a lot of the gains within healthcare, and to the extent to which that story starts to change, it may be it may not carry the sector. Obviously, healthcare hasn't been one of the great performing sectors this year, but Lilly has ultimately held it up more than would have otherwise been.
Ryan, over at Strategas, you work with folks who know politics in Washington very, very well. I'm just curious, Ryan, how the team there is thinking about, the possibility of a Trump-Vance White House and what that would mean for the markets.
Yeah, so I don't want to speak too soon. I don't want to speak, for our Washington D.C. team, but obviously, we have to kind of get through the nominee portion. Obviously, we know who the Republican nominee is. Obviously, there's still some questions out there about who the Democratic nominee. I think ultimately, trade is going to be a big focus. Should the Republicans ultimately win the White House. Obviously there's a lot of concerns about what that means for China and the tariffs. So I think that's also playing into some of the sell-off that we're seeing here with regards to technology. I'd say the other thing ultimately that comes up is, there's a lot of talk about what's ultimately going to happen with some of our closer trading partners like Mexico. Are they being used by China right now as a building block to kind of assemble pieces and then distribute them into the U.S. Obviously, there's been a lot of foreign direct investment from China into Mexico, and will that ultimately come to fruition? Will that come to a head during, say, a Republican presidency? So these are some things that are left out there. I think the biggest thing will be ultimately on the tax front, which obviously we're starting to get ahead of ourselves when we really start to talk about that, just given the amount of events that are ultimately going to occur between now and actually the election, and then the investment implications will be even further on from there.
It's a long way between now and November for sure. Thanks a lot, Ryan. Appreciate it.
Absolutely. Thanks for having me.